Is AI supporting or hindering the ability to prevent and monitor insurance fraud? Today, we have the FintechOS Evolv Insurance podcast to answer that question. I've got an exceptional guy with me, Matt Gilham from WHITELK. Matt, it's a pleasure to have you, and I'm hoping this is going to be a good one because it's one of my favourite topics.
Really looking forward to it, Scott. And I'm sure you've got lots of questions waiting for me, so looking forward to cracking on.
Right, let's get on because we've got a good session to do. Right, so Matt, I've over the last 10 or 15 years, I've always been involved in some shape or format with insurance fraud. In the early days, I was always selling capability to detect fraud. However, I've moved on, and what I'm keen on understanding, especially for me and for the listeners today, how do you feel, what's the current state of insurance fraud in the marketplace at the moment? Can you just bring me up to speed? Because not everyone will be fully aware, and I know things have moved on. Yeah. So could you just give us a history of, because I know you've been doing this a long time, where are we at the moment? Because I'm not 100% sure, but it would be good if you could tell me that.
No, absolutely, Scott. And I guess it's a question that's got a number of parts when we look at it. I mean, as you say, I've probably been in this game far too long, starting to kind of countering insurance fraud back in 2001. And we've definitely been on a journey over the last kind of 24, 25 years. So looking at the current state of play, well, obviously kind of the best guide for us is still the ABI stats. It's the best benchmark that's out there. There are other benchmark guides that insurers will use, but it's the best public guide. And the 23 figures that were published at the end of 2024, pretty much unsurprising. So still showing a cost of detected fraud or fraud savings around about 1.1 billion, with cases of actually kind of 84,000 cases. But I think the more interesting bit is kind of the elements behind those figures. So we've been running at savings of over $1 billion a year since at least 2012, 2013, with a peak in cases around about 139, 140,000 way back, looking at my figures, again back in kind of 2012. So and we've definitely been at 1.1 billion for detected savings about the last 5-6 years. So the actual savings isn't fluctuating hugely, but the case numbers do go up and down. Now, we know there are a number of moving parts to this. Earlier around the teams, we had the PI surge 2009, 2010, then the pre-LASPO surge with cases, and all of those were influence cases. So what we're seeing now is kind of the savings figure still around 1.1 million, which motor making up around about 55%. A chunk of property and the rest kind of other lines of business. So I guess it poses the question about if savings are that kind of stable, we know capability is stepping up. Is fraud declining, and what there is we're catching more of, which is quite possible? Are there other things in action? And I guess one of the things to really focus on is it hasn't been that many years that we've been capturing the number of policy frauds identified. And in the 23 figures, reading down, it was just under 600,000 cases of policy fraud, which if I remember correctly was 17% up on the prior year, which shows that we are doing more at the front end to detect fraud. So I guess the kind of real question is, if savings are static, we are doing more at the front end to detect fraudulent policies, what's that mean in terms of kind of the mechanics behind there? And I guess, even this year, if we look at just two of the major insurers have really kind of published their savings figures, one for about 150 million, another for about 94, 95 million. So with just two insurers, you're looking at savings of 250 mil after out kind of compared to 2023 savings of 1.1 billion. So there's clearly kind of more out there.
And Matt, what's because I was always told by one of the leading guys many years ago. So app fraud is good, but the problem is with app fraud, unless you're going to commit claims fraud, the insurers have just lost a chunk of gross written premium. So what's the relationship between, to block someone, have you got to be confident that they are committing fraud? Or more importantly, is that blocking the app fraud an indicator these guys could be involved in a witness on a claims fraud, or how does it work? Because I was always told you've got to be a bit careful on this because you've got to get it right because you're costing us gross written premium.
And you're quite correct. You do have to be careful. You do have to get it right. And this comes down to different insurer and broker risk appetite. So yes, there is a chunk of application fraud where the policies are taken out to commit claim fraud. Or there may be certain types of policy holders that will take out a policy and they might have a higher propensity for opportunistic fraud. It could be due down to financial stress or anything of those. And all of that can be spotted. Ditto, if somebody manipulates a quote, does that mean they're more prone to exaggerate a future claim? But this is where it comes down to underwriter, broker, risk appetite. So some that I know have looked at it, and the loss ratio and the lifetime value of a fraudulently incepted policy is significantly poorer than a genuine policy. And purely on that basis, it makes sense to block those either pre-inception or pick them up post-inception. There are others when they've done the analysis, and kind of fraud is a kind of core part of kind of reserving profiling these days, where they're very happy just to identify something, charge the AP on the basis that a warning is then be given to the policyholder, and they're comfortable that having given that warning up front, it will actually reduce to a lower propensity to have a fraudulent claim or potentially even a claim. So the answer is it is done carefully, but it will depend on insurer or underwriter risk appetite and their calculations on what the loss performance is. But certainly overall, in terms of both loss performance and OPEX cost, a fraudulent accepted policy, in the main, subject to risk appetite, has a worse lifetime value than a genuinely accepted policy.
So traditionally, I've always been focused on personal lines, motor and home. And I've always thought the ability to we can talk about this as I'm going to start layering all the different layers about fraud, but I've always viewed personal lines, motor and home as the key ones, just because of the volumes. The ags are kicking in so many volumes that it's all going in potentially in the wrong direction. However, given that over the years that maybe personal lines teams have been built up for both app and claims fraud, that they're working together, do you feel has there been a shift away from motor and home, given that now we're living that life-centric view where I'm bringing in motor, I'm bringing in travel, I'm bringing in pet? Has there been new opportunities in new lines of business to start committing fraud? Are you seeing that? Because we're going to go into the details, but I'm just wondering, has insurance fraud evolved with the lines of business that now is starting, especially pet? Because I want to talk about pet later. But do you feel same type of fraud profile, or are people becoming different in the way they manage it? What's your thoughts?
Well, it comes back to the stats we talked through and kind of the drivers. So generally at the moment, with cost of living crisis and need for money, there's a general sentiment in the market that opportunistic fraud, so exaggerated claims or fabricated or kind of non-disclosure misrep policy inception, is higher than we've seen historically. So I guess that's kind of one driver. And where you've got personal lines products in particular, where there's scope to make money out of exaggeration, then there will be a natural kind of movement towards those type of claims. Looking at motor, certainly it is considered these days more of a managed fraud type. So, but certainly that's where, there's definitely a focus on new solutions to keep that under control, both in terms of data and technology. But certainly looking at kind of pet and travel, if there's money to be made and the fraudsters see an opportunity and or a weakness within insurer controls, and that's the other part of the evolution, as we move to straight through processing kind of an automation, if the vulnerability is there and the fraudsters see an opportunity, they will naturally migrate to other products. And we're doing that some of those lines of business are relatively underserved in terms of certain technologies, be it a version of Q, or be it the ability to actually kind of pick up these claims and kind of like share information and intelligence, be it commercial, be it kind of life, health, pet, travel. But we are seeing fraud in those areas, and the players know those are areas of vulnerable, so it is an area of focus.
And given that we are the way we build systems now, the way we build onboarding customers, the way we do FNOL, the way we do claims triage, it's now moving into that much more self-service. You mentioned straight-through processing, which I love, but given that we're moving into that digital world where it's self-service, do you feel as software companies like FintechOS and like insurers and all the other providers that build this ecosystem, do you feel that the fraudsters are now still one step ahead of us, given that they've got the ability to upload documents, take photographs, take videos, God knows what they're doing behind the scenes? Are we as systems providers and insurers, are we starting to get armed with the right capability to deal with this digital change, or has that digital change made it even more easy for fraudsters to commit the act?
Another good question. I'd like to use the example of identity fraud, kind of on, say, motor policy application. We go back 20 years, and did we want to ID check a new policyholder? Yes, we did. Mm-hmm. Did we want to do a Q check a new policyholder? Yes, we did. But if we go back 20, 25 years, the data was too expensive, the systems were too expensive, so we couldn't do an ID check at point of inception. We couldn't do a Q check at point of inception. But particularly kind of driven by the advent of kind of the aggregators and high-speed volume inceptions, suppliers started developing the data that could. So Q got indexed, and rather being several pounds for a Q search, which could only be done at point of claim, definitely not in a large motor book, it became cost-effective to do a Q search. The large data vendors came up with identity indexes to say actually the strength of somebody's identity, and that became provided again at point of quote. So over time we moved with technology and with data from something we wanted to do at point of quote, point of bind, but we couldn't because the cost was prohibitive, to having the technology and data that we could do it, and that became accepted in motor. And I think it's very similar in these other areas where the fraudsters will always probe around the edges, particularly if there's a vulnerability. But we will then kind of catch up potentially with the data. The leaders are thinking ahead and investing in kind of like AI and data to get there before others, whereas kind of the those behind the early adopters and the laggards will then be playing catch up. So it does depend on the nature of the insurer and again their risk appetite. And we're seeing it with some technologies at the moment, be it kind of like voice analytics, the adoption of large loss models, and particularly kind of in commercial. I was speaking to a defendant solicitor just last week where they were flagging up a high proportion of the cases still coming across their desk at point of claim on a commercial policy and claim. They were finding indicators of fraud at inception, which kind of coming through kind of the broker, for things like ghost directors, shell companies, identity fraud with the directors, undisclosed ultimate beneficial owners with adverse information against them. Now, all of that stuff is completely detectable. It's just part of standard know your business, which is no different to what happens in the bank, the other wider financial services. But it will take, it has to take time to kind of seep into the insurance world to go, actually, it is cost effective to run those checks at the point of inception, particularly in an intermediated acquisition channel. So we do evolve. But I think one of the other things, and I always use the example, I'm sure you remember that the lab host arrests in April 2024. This was a fraud as a service company. I think there were kind of multiple arrests. So multiple arrests in different companies. So it's not kind of the techniques they're employing that particularly interests me. But the bit that does interest me is they were selling their services, so fraud as a service, for something like $300 a month. 2 organised criminals, 2 organised fraudsters. So if the balance of cost and of technology is so different, so a potential fraudster, less than $4,000 a year for full service to commit a fraud versus the amount we have to invest to combat a certain type of fraud, there's an imbalance there.
So Matt, how would that manifest itself? Just give me an example. So this fraud as a service, what will they be providing?
Been speaking to a number of the firms that provide counterfeit document identification, and they're very comfortable in pointing out that there are already template farms online where you can get a template for broadly any document through one of these providers online. You don't have to be an expert in LLM or GPT prompts. There will be somebody online that can provide it to you. Similarly with identity information or compromised identity information. Thinking what you said around kind of our evolution. As we've evolved on, say, identity data at the front end, fraudsters kind of they know which insurers will check for identities, synthetic identities, fabricated identities at point of quote. But if that insurer is of value, so they know that if they do get a policy or take over a policy, they can get through a fraudulent claim, particularly if it's straight through processing with poor controls, that insurer will still be of interest, could be a target. So what we have seen is the migration of where fraudsters can't actually get a policy on board, say a fraudulent policy with a synthetic identity. They will make use of compromised data for a genuine person, say credential stuff, a vulnerable online servicing portal, and then put through an MTA to take over that genuine customer's policy, and then put through the fabricated claim. So the genuine customer doesn't know their policy has been policy hijacked or taken over, and the fabricated claim will be put through. So in all those instances, whether it's documents, which everyone is acutely aware of, or whether it's obtaining compromised data, which is maybe known to be linked to an insurer, and then selling that data for targeting an online servicing portal, and those are all the potential opportunities that an organised fraudster can deal with.
So as a provider of core systems, so if we're all moving down the route of, I'll tell you what, let's take pet for example. I'm not going to ask you 50 questions at quote to mind. What I'm going to do is take a photograph of your pet, take a photograph of your driving license, we'll give you a quote. 2 documents uploaded. So that could be fit within the fraudsters as a service model. So to get your quote. Similarly for claims, once a claim's being made, I presume these fraudsters as a service can provide the correct documentations for invoices, for treatment plans, where if we're trying to do straight through processing on a claim, these would look potentially correct, wouldn't they?
And if the value is there, the tools to do anything are there. We're in April. If you have a look at LinkedIn just this month, the number of examples of fabricated restaurant receipts that are doing the rounds on social media, where you can input the name of a restaurant and the technology goes off, looks at its online menu, and creates a perfectly formatted receipt. That is technology now. You can find the GPT prompts online. So again, if there's value, the right or wrong person will know how to either do it themselves or be able to find a contact that can do it.
So that approach to doing that, the traditional vendors in the market that help to identify fraud, are they also now supporting that approach? Can they combat it? So have we got the ability to look at invoices and stuff like that to go, we know it's fraudulent? Or are they looking at that? Or are they still, all of the service providers, data providers, technology providers, are they still looking at the historical way of doing things? Or have they now caught up and thought, we can handle this new way of coming in?
It's a combination of both. So you still need the, I won't say historic, the more traditional ways of identifying fraud. It absolutely fits. But there's kind of emerging need for kind of more point solutions to identify actually these documents could be fabricated. So can we detect an AI generated image, for example, or something that looks like it's been fraudulently counterfeited? When obviously we're not talking Photoshop here. We're talking kind of, so those point solutions do absolutely exist. So I'm actually in a very different space to where I was maybe certainly 20 years ago, probably even 5 or 10 years ago, where I knew what my fraud challenges were, but I didn't necessarily have the data or the technology that could solve those challenges. The issue I've got now, not really an issue, is it an opportunity, is it a challenge? Not too sure. Is I think I know what my fraud problem is. I know what the range of solutions out there, but my challenge as a fraud leader is how do I most cost effectively and efficiently combine those to give me the optimum outcome. So there's a raft of tools out there. When I've supported firms on doing, say, pre-RFPs or tenders and market scans, for the issues out there, there are a number of providers that can tackle most problems, and the key thing is it comes into strategy about, as an insurer, as an insurance organisation, how do I identify the right vendors? How do I combine them in the right way? How do I make it fit into my overall strategy? Not just taking into account fraud, but also taking into account what's my overall organisational approach around customer experience, what's the organisational approach around operating ratio, and making sure my strategy actually fits those wider points.
So do you feel that the insurers at the moment, look, they've been dealing with fraud for many, many years now. Are they now at a position where they're fully armed in terms of understanding? When we caught up many years ago, we always said that fraud's a bit like Swiss cheese. There's holes popping in everywhere, and will you ever fill them? Who knows? There's the number of holes, and then there's the size of the hole that you have to consider. But do you feel now that insurers, with the amount of data, the amount of technology, the amount of service that are out there, do you feel that they've got the range of tools and capability at their disposal? It's just whether or not they're actually using it correctly, or do you still feel there's a gap?
I think the effective words you mentioned there is kind of having the tools at their disposal and the appetite to actually implement. So we know within any kind of insurance business armory, I use the word armed, there are a number of things they may want to do if it's part of their strategy. So it could be prevent, detect, kind of investigate, intelligence, case management, link analytics, predictive modelling. But at the same time, there's an increasing kind of capability internally. How many insurers got data science teams, which have been proven to effectively replicate and in many aspects do better than some external providers. They've got bigger data, they've got more focused team, they've got more dedicated resource to look at fraud. So I think the opportunities are there, but there are always, say, emerging tools. So like emerging threats, emerging attacks, and emerging tools. So there is an opportunity to be fully armed, but then there's a big but, is we can't all buy all the tools that we want. We can't adapt the risk prevention strategy we want due to maybe other pressures on keeping OPEX down, straight-through processing, CX, that kind of thing. And this is it sounds like a divergence, but it isn't. This comes back to your first point on metrics and where are we? Or say I touched upon the 1.1 billion in terms of savings. I've been a little bit provocative. I'd say is savings actually the most mature, the most effective figure we should be really looking at? And it comes back to your point just now. So saving is fine. But if you think about all the resource we have in there, and I mentioned kind of a couple of insurers with their total savings kind of being 250 mil just in kind of isolation. I guess the big question is not savings, which again, say being a bit provocative, is that a kind of a vanity figure? But it's how good are we at actually kind of managing the total cost of fraud, which is actually the best measure of success. And by total cost of fraud, I mean it's the amount of fraud that you suspect was maybe undetected that you're actually paying out on. So it's actually kind of like fraud loss. It's maybe the indemnity cost incurred by bad or poor fraud strategies. It's maybe the failure demand from counter-fraud processes having a negative impact on a customer journey or kind of claim. And I guess when it comes to the overall value and evidence that we're doing better at fraud, it can be evidence that the total cost of fraud is going down, because that shows that we're winning, that the actual cost of managing fraud in its entirety is decreasing, which does come back to the question you just posed. In terms of have insurers got the opportunity to be fully armed, I'd say yes. But it is subject to the investment envelope, it's the resource envelope, it's overall kind of company strategy on insurance fraud. So I'm going to have to firmly sit on the fence and say yes, but, and the but is for some very good reasons.
So if that's all in place, so we've got good data, we've got all the analytics that we've talked before, we've got the AI. the thing that I'm quite keen on understanding is what do you feel that from an organization like FintechOS and an operational policy billing claims, FNOL, triage, quote to bind, what do you think we should be offering? Not just FintechOS, but a core system, because most core systems get implemented. The question is, it's then left to organizations to build their own fraud strategies. Question is, should we be playing a bigger role in saying, when we turn up to an organization, I can help you, and I can help you in that we could have some fraud models built, or we could have accelerators to allow you to build your strategies quicker, because a lot of this is real-time capability. You do want to get it at quote and bind, and you want to definitely identify something at FNO in that golden hour. Do you feel that as a core provider, are we standing up to what we said we're going to be doing, or do you think we're lacking behind and we're just not providing that capability, or should we not and just say it's up to the insurers? I can ingest anything you want, but it's your responsibility. How much should we be doing?
So I'm always of the opinion that as any solution provider, the ultimate aim is to provide the best value for your customer or client. And that's kind of nicely sitting on the fence without kind of giving you any specifics. But there's kind of like two kind of real points that kind of, so that's a fluffy way of saying, yes, you should be thinking about it. But there's other kind of two kind of more definitive points I would say. The first, which would be my biggest ask to any platform provider, is help us move beyond the dreaded MVP, the minimum viable product, or in my terms, the minimal viable purgatory. And it's very easy to launch something and then you get stuck in the MVP, you can't take it forward. So that would just be a kind of high-level takeaway, kind of the ask. So make it easy for us to go beyond an MVP. But think about kind of the potential role of platforms, and bear in mind what you said, the operative bit is what does the customer or the client want to do. So how they want to pick and choose and link things together, that is down to them, but kind of there's a role in supporting them. I think of the kind of the process in kind of like three chunks, and I stand firm on that. The first role you have to play is on the data bit. So that is helping your client capture the right data points, store the right data points, orchestrate the data points, and then make them available to however the customer or client wants to use them. And that really is important. So as a platform provider, there can be things that you think are not relevant or you might outsource, such a point of payment to a payment services provider, where you may say, well, it's not actually our role to store the tokenized credit card number or store a risk score that might be coming back from one of the kind of the big PSPs. But actually, if the platform's not storing it, the client's got to find a way of receiving that data back, storing it and merging it together. So it really is thinking about that whole kind of data capture bit. Have you got the necessary fields or the flexibility to capture the right data points that can then be used? And this comes back to the MVP, because you've got a very like kind of strict schema or structure, or you've got a swamp instead of a data lake, then you make it really difficult. So the data points that could be helpful are immediately locked. They're stuck in MVP, minimum viable purgatory. The second bit is having captured and stored the right data. Data integrity, the level of data integrity is a separate conversation, so we'll park that for now. The next bit is kind of the tool that you want to use. And as an insurer, as an insurance leader, I'm pretty agnostic when it comes to tools. If I've got a platform that can give me 20%, 40%, 80% of capability, I will try and if it's the most efficient, effective way of doing it, I will make use of that capability. In fact, I'm working with a non-UK insurer at the moment where we're looking to do just that. Before they start investing in a platform, we're looking to see how we can leverage capability of the platform to get their SIU kind of fully up and running. So it's quite interesting.
But do you see, because what I'm keen on understanding is, do you see more of a shift? Because traditionally, from fraud, as a policy administration system or a claims platform, we will collect data and we'll manage data. Calls out to all of the key vendors on the market that provide this. Do you still see that as the way of doing it, or should as a core platform, should we start ingesting capability that the insurers have physically built into our system? So, for example, I don't know, a nice high-end propensity model for fraud normally sits outside the policy system. Should we now be ingesting that and allowing that system to run within our environment as opposed to outside? I'm just thinking, should platforms like us start opening up our capability and offering more and more function to the insurer, and rather than saying you've got 4 or 5 different providers that we can call upon? Should we bring things closer to us, or do you not feel it's that important?
Well, I think it comes down to the understanding you got with your client. So on kind of there's 3 component business. So you've got the data bit, you've got providing the data to your weapon of choice. So it could be a platform, could be any of the others. Then the third key component is getting it back into production, getting it back into BAU.
Yeah.
Whether you want to use that to drive reflexive journeys on a customer journey, or you want it to drive, say, real-time blocking, or you want it to drive a workflow within kind of a claims handler or a policy validator. So you have got these 3 component parts. And so going back to your question is, for me, I'm agnostic. But if the platform has got inbuilt capability where I can really quickly do something, gives me a base layer of capability. And I think it's very much these days, it's not around having one silver bullet or universal panacea. It's, within my overall strategy, what can I do with what tools? And it will depend, say, from insurer to insurer, the capability of the platform. But say, I'm looking to try and do something that is both effective, i.e. it's accurate, I know it's going to give me a really good hit rate on fraud, it's not going to inconvenience genuine customers. I've got a within appetite false negative approach, so very effective and efficient. So it means it can actually drive efficiency in terms of not intervening in a genuine customer journey and drive what my operational team's supposed to do. Whether it's with an external tool or with a platform, I don't mind. I will leverage that asset, but I'm certainly looking for a platform that can help me do what I want in my strategy. So if I'm being absolutely caned on my acquisition journey because I'm weak at point of payment, I want a platform that we can switch out really quickly to new payment services provider, ingest that information, and we can help you store that data, surface it, so you can do more at the point of sale. If it is, I'm really concerned around getting fabricated documents coming in at the point of claim, can you help me store and make those documents available for reading by large language models to help me interpret within a claim and across my claims portfolio what might be going on? So there's no one single easy answer, but it's definitely a case of there's absolutely a role to play. You have got the main fraud platforms, and you've got and you've got endpoint solutions. But for me, it's about how you get the layers right, and it's within the platform where there will always be a need for, well, how do you communicate for handlers? How do you make the workflow? How do you ingest any risk indicators and help it inform what's in the kind of like core system? And the key thing for me is, how can you help make my life easier? And terms, both in terms of effectiveness and in terms of efficiency.
So Matt, I am conscious of time, and there's 2 things I want to still have a little chat about. So AI. So every podcast we do, every conversation I have, everyone's talking about AI. So, I mean, we've already touched on it now about the use of fraudsters using AI. What do you think about how the insurers could be making use of what's coming on the market to help them prevent or combat fraud? Because it's a topic, whether it's smoke and mirrors, whether it's everyone talks about it. I mean, I've been around a long time in the analytics world, and I see, I can't mention previously, but I saw one insurer building 14 AI models. Everything's good, everything's fantastic, until you got to the innards of it. And what prevented these 14 AI models being implemented, being tested, was the regulator. Now, we all talk about AI, and I'm sure that it's all finding these use cases which are fantastic, but time and time again, especially in the claims world, straight through processing, if we're handing that decision over to a model that no one has touched and decisions are being made, do you feel it's the same for fraudulent activity? If I use straight-through processing AI model to determine that that is a fraudulent activity and I'm blocking it, and then I follow the 10 processes, is that happening in your world at the minute? Are you seeing that that is now starting to be adopted? And are the regulators happy to say, for full transparency, I can see you identified fraud and you blocked everything and you eventually build the evidence to take this person to court, all using AI, no claims handler involved at all? Is that how you're seeing things or not?
There's a number of questions in that point, Scott. So let's start off at the simple end. So the use of AI, whether it's predictive analytics, large language models to read documents and interpret the content. If you had asked me that question 9 to 12 months ago, I would have thought, I'm hearing people say a lot of things. I'm yet to really get kind of like firm evidence of use cases being implemented in anger. Over the last 3 to 6 months, I will say I'm a convert. I've seen sufficient inaction activities and stated outcomes to say AI is proven to be successful, particularly in the fraud space. Whether it is use of LLMs, whether it's new voice analytics, whether it's predictive engines, getting better at identifying fraud cases. It's not a case of could insurers be using it. They are, and it's successful. I think things have changed, so insurers are using that. On the other part of your question around how can they use it, I think we have to be very careful how we define automated decision making. And is there a difference between decision making, i.e. this looks risky, it has to go to a human for review, versus the machine has said this is a fraudulent claim, we're not going to pay it. And again, I am seeing kind of different levels of appetite in the market, but genuinely pragmatic and quite reasonable cautious approaches. So the AI being used to decide that something is good, absolutely, that's kind of supports and enables straight through processing. There is no detectable risk about it. So it's not adversely impacting or influencing a particular consumer journey. Where it's being used to identify fraud, I think there's quite pragmatic caution to say, actually, we'll use it to make a decision to maybe something drop out of a process without maybe negatively impacting on the journey as such. It's just dropped out as you would in a previous kind of scorecard or human decision-making process, and use that to inform a second or third or fourth set of eyes from a human to say, actually, we'll gather the evidence, and once we've gathered the evidence, we will make a decision based on what the AI has detected. But that, I think it does all come down to transparency, to understanding, and a real kind of pragmatic view on how it balances with the impact on the data subject. So definitely being used, 100%, completely convinced of that. I say I'm starting to hear some very impressive outcomes, but there is, quite rightly, a healthy understanding of regulation and the need to have the use of AI very, very much controlled.
Okay. So, Matt, we are coming to an end, but there is one final question. I'm going to put you on the spot here. Right. I know you're not going to answer this one. Right. Of all the years you've been doing this, look, I know you've seen a lot of stuff, and I know you're speaking to a lot of people. You've seen all of the systems. Who, going forward, let's just catapult us just a few years ahead, 4 or 5 years ahead, with all of the advances in data, with all the advances in capacity, just being able to process things, with the number of people that are being used to combat fraud, who's winning? Who's winning this race? Are the fraudsters winning, or have the insurers, are they getting their day and they're going, we're getting there? Who's leading?
Purely because the fraudsters will be one step ahead. That they've got far better, I firmly believe they've got far better intelligence about us
than we have of them.
Than we have of
really?
Them. Yeah, I'm pretty confident on that. And they'll be testing and trying around the edges and finding a weakness, far before we have identified the weakness. until we get to the point where our AI is so intelligent, it's continually monitoring for processes with failure points and kind of like vulnerabilities. So in that aspect, I think they are ahead. I think the ones that will win will be those insurance organisations where the use of data and technology is firmly embedded in strategy, and there's a willingness to do the kind of threat scanning, the opportunity scanning, and kind of think ahead. And I think rather than either being the fraudsters or ourselves being winners and losers, the difference between the winners and losers will be the pioneers and early adopters, and those with comfort in innovation, and those which are less comfortable with innovation, that might be kind of the late adopters of the laggards.
So great. That to me sounds like tech, money, time, people, tier 1, tier 2s. How are the MGAs and brokers that haven't? How are they going to do it if they've got responsibility? Can they still do it? Because that sounds like a big ask, and it sounds like it's going to cost a lot of money potentially. But can the MGAs, brokers still play their part?
Absolutely. And I've seen some very impressive predictive models from both MGAs and brokers. And this is where the opportunities for the insurance ecosystem to work together. So kind of the capacity providers, the underwriters, the brokers, the MGAs, and it's finding kind of where in the overall kind of like chain, and actually kind of the claim supply chain, where can things best be done. So no one point has to be perfect, but there has to be layers to identify the fraud risk and do something with it. So I think everyone has a role to play, but for me it does come back to these original points around efficiency and effectiveness. So even if it is have to do just enough, MGAs and brokers have a role to play. It then comes around efficiency, is how to get that magic spot between being effective, so doing their bit to deter, prevent, investigate, escalate a fraud concern, with efficiency. And whether that's kind of making the best use of data, so layering it in the right way, or your tools layer it in the right way, so you're actually hitting the outcome you want, but actually keeping the total cost of fraud low, and that's the efficiency part.
So Matt, we've run out of time. I can't believe it went so quick, to be honest, and I know we've still got a lot to talk about. So maybe another one.
Absolutely.
But it's been a pleasure. And thank you so much for doing this.
Scott, it's been an absolute pleasure chatting to you. Thank you very much.
Okay, thank you very much. Cheers.